Bitcoin is crashing, Ethereum is crashing, the stock market is crashing, the sky is falling, and you're wondering, are NFTs next? Well, my name is Devin Cook. Let's talk about this market crash and welcome back to Dev Money. So we're first going to talk about what's been going on with the market and what's been causing these corrections that we're seeing really across the board. And then we're going to talk about Bitcoin and Ethereum and how NFTs can be affected. So what really got this all started was on November 30th, Jerome Powell said that they were going to be accelerating the pace of the taper. And the tapering is just the reduction of the rate that the central bank is accumulating new assets on their balance sheet. And in this case, they're going to be slowing the rate that they're buying mortgage-backed securities and bonds until we get to March, where they're not going to be buying any at all. And this was recently confirmed a couple of days ago with the announcement that they're going to be increasing the Fed rate. And this is what really took the stock market and crypto and just kind of took it into a nosedive. And if you're not familiar, the Fed rate is basically the interest rate between banks. Basically, if one bank wants to lend money to another bank, the Fed rate is the interest rate that these banks are paying each other. And this will impact everybody because as banks have to pay more money to lend between each other, you're also going to have to pay more money for your car loan, for your home loan, and basically any other loan that you're going to be getting. Because if banks are having to pay more money, surely they're going to want you to pay more money as well. And we can already see how much of an effect this has taken on mortgage interest rates. Right now, we're sitting at about 3.22% average 30-year loan, which is up a point since last week and up 5.5 points since last year. And you can see this on the chart as well. The mortgage rate started climbing on December 23rd, and right now it's at that 3.22% level. And I really wouldn't be surprised if we see these rates go up even further, maybe touching the 3.5% mark and potentially even going up as high as the 4% mark. And we can see how this has affected the stock market as well. We can see since the start of the new year right here on the 31st and the 1st, we've basically just taken a big nosedive down from our peak right here, at least at the end of the year, of 15,800 down to right around the 14,900 mark. So we've lost about 1,000 points, and this is really the space that we're testing out right now. And we can see if we drop further and go past the support line, we can see that our next target is really going to be the 14,450 mark. And so only time will tell, but we may get to that point, but we're just going to have to wait and see. So that's how it's affecting stocks and real estate, but how is this affecting the cryptocurrency market? Well, it's actually really interesting because we have some other factors at play here. Recently, I'm not sure if you've heard the news, but there's been a lot of unrest with Kazakhstan, and actually Kazakhstan is one of the chief Bitcoin mining countries, and they contribute a massive amount to the Bitcoin market. And we can see here, because of that civil unrest and all the things going on, that they actually shut down the internet, which of course shuts down the Bitcoin mining. And so you can see how that's doing right here. You can see we hit 181 million on December 9th. Right now we're sitting at about 178 million, so not too far off, but we did see this real big dip right here down to 168 million. So only time will tell how this is going to play out, but assuming that they're going to get the internet back up and running, we should be good to go here. But that is playing a role in the price of Bitcoin. Speaking of which, we can look at the Bitcoin price and see what it's doing, and it has been a bit of a bloodbath. You can see our peak right up here on the 9th of November. We hit 67,900. That was a great day for Bitcoin, and we've fallen basically down here to the $41,600 level. So what are we going to potentially see happen from here? Well, you can see that we're seeing quite the decline in the 50-day moving average, still a bit of an increase on the 200-day moving average. If the 50-day moving average drops below the 200-day moving average, we could see a death cross, which could just mean more downturn for the Bitcoin. We could see a more loss in price. But I'm not necessarily thinking that's going to happen at this point. Only time will tell, but we'll have to see. And as of right now, we're really just hovering right around the support line that we had from the end of October of about $41,000, $42,000. If we do break through this resistance level right here, we could see the next support line probably at about 37,900, which we saw back here in August of this year. If we do see the market decide to pop back up, we're gonna have this resistance level of 46,000, and the next one after that is gonna be the $50,000 mark. And we can see with Ethereum a lot of the same thing. We had this peak right here, 4,800 in early November of this year. Right now we're hovering right around the $3,100 mark, and our next support level right here is about 2,800. So we could still potentially see a bit more downturn in the Ethereum price, which in my opinion would create a great buying opportunity to get into more Ethereum. And if we pop back up and rebound a little bit, we're gonna have this resistance level of $3,800. I would not be surprised if we break through that pretty easily. We've been pretty good at getting over the this $4,000 mark. And so I would suggest that we're gonna have this support level of 4,100 pretty easy once we start seeing that rebound again for Ethereum. Now, some of the other factors that are playing a role in this is we're seeing a lot of liquidations across the entire crypto market. You can see right here that with 24-hour liquidations, we're sitting at $530 million. That's in all cryptocurrency. If we wanna look just at Bitcoin, we had $185 million liquidated, Ethereum, 170 million, Solana, 21 million. And again, this is in a 24-hour period. Now, if you wanna see this in a chart form, we can come down here and we can see total liquidations plotted against the price of these assets. Now, let's actually take this, instead of going total, let's just go to Bitcoin right here. Obviously, as you can see from the chart, the more people liquidating Bitcoin, the lower the price goes as we get a lot of selling pressure. Now, we're floating in this range right here, not quite as big of a sell-off that we saw back at the start of December, but we are seeing a fair amount of liquidation that is just contributing to that price driving lower and lower. And another factor at play is that people are moving their Bitcoin and their cryptocurrencies off of the exchanges. Now, this could be for one of two reasons. One, people could be taking their Bitcoin and their other cryptocurrencies and sending them off to a cold storage wallet. That can definitely happen. It happens all the time. But another thing which we know is happening from the price of Bitcoin and Ethereum and basically the entire crypto market is people are selling off their crypto. And we can see this plotted on the chart where we have the price of Bitcoin right here, and then we have the total exchange supply of that coin, which we can see is decreasing, and obviously as well, the price is decreasing also. And the last thing to look at with Bitcoin is we can see we have actually quite a fewer active addresses trading and holding Bitcoin. We're right around the $960,000 mark. We saw a peak about a year ago of about 1.1. I think we may have hit 1.2 million. Now there's a 1.2 right there. So what this means is we are about 20 to 22% lower in terms of the amount of people actively trading Bitcoin, which means we have less people in the market. Less people, less money, typically lower price. So it's definitely looking a bit bearish for crypto and for the stock market, but how is this gonna play into NFTs? Well, if we look at the OpenSea total daily volume, we can pull that up right here. We can see that we had these massive spikes. It's not gonna let me zoom down a bit, there we go. Let's zoom in here. So we can see we had these massive spikes in volume. On the 3rd of January, $255 million, 241, 247 on the 5th, but now as we've seen the prices of Bitcoin and Ethereum tumble, we've also seen less volume in total daily trades on OpenSea. Or sorry, not daily trades, but total daily volume. Down to 181, and then today so far, January 7th, when I'm recording this, $127 million. So we're basically back at the levels that we saw at the end of the year. Now, another thing important to look at right here, we have active monthly traders on OpenSea with Ethereum, and we can see we had this massive spike right here in December at 362,000 active daily traders, active monthly traders, sorry, keep messing that up. But as of right now, on the 7th, we have almost 200,000 active traders. Now, I could definitely see a scenario where we have more active traders in January than we do in December. Based upon the pace that we're at, 200,000 right now, 368,000 or 362,000 total in December, we could see a scenario where we come pretty close or right around that 400,000 active users mark, and that would be really great to see. Now, here's some factors at play that may influence that. If we come over here to Crypto Slam, we can see the total sales volume in the last 24 hours. We can see that some projects like Fanta Bear are having 300% increases over the last 24 hours, which is just excellent. But we are seeing some more red as well. Bored Ape Yacht Club down 3.77%. This is in terms of sales volume, not necessarily floor price. We're gonna look at that here in a moment. CryptoPunks up 164%, 40% down on Mutant Apes, 15% down on Axes, 47% down in Doodles. But we are seeing some increases as well, like the Sandbox, 11% up, Pudgy Penguins, 43% up. So we do have to take all of these factors into account. And we can see if we look at the blockchain total sales volume, Ethereum down in total about 7%. Ronin, 15%, Solana, 5%, Wax is up 27%, so that's good to see. And then if we want to see how many NFTs have been sold on a daily basis, at least since January 6th, we had 44,000 total NFTs sold. So this is really going to correlate with that volume graph that we were looking at, where we had quite a bit of volume right here at the start of January, but now we've seen that kind of taper off right here. So definitely lines up with what we've been seeing. And in terms of the floor price for some of the most popular projects, we can see that Bored Apes are down less than 0.5%, Mutant Apes 0%. That's probably honestly not updated. I would be surprised if they're completely level. 23% up for Pudgy Penguins, 1% down for Doodles. So you can see that NFTs are actually holding pretty strong when it comes to the floor prices of these NFTs, which may seem a bit contradictory when you come and look at these charts over here and you're seeing a lot more red right here. But there's a difference between total volume and the floor prices. What this means to me is that we are seeing less volume as people are generally pulling out of the markets, but we are seeing those that are holding some of these popular projects like Apes, Mutant Apes, Pudgy Penguins, Doodles. The floor price really isn't being affected by these. To me, this means that the communities are very strong, that they're holding onto their NFTs, and they're not being scared by the sell-off in Bitcoin, in Ethereum, and in the total stock market as a whole. So how do I see all of this playing out throughout the rest of 2022, and especially with the next couple of months? Well, if we come back over here to Bitcoin, I honestly wouldn't be surprised if we saw a bit more of a decline and we saw continued sell-offs in the crypto market. And this could lead us getting down to this 37,900 threshold, where we could have support right here and potentially stay over that level. Although if you do remember, back in 2021, we did actually hit this level back around here in July, where we bounced around the $29,000, $30,000 mark. I do not expect us to get down to this level again. Obviously anything can happen, but if we go lower, I'm assuming we're gonna stay above or right around this $38,000 to $42,000 mark. And with NFTs, people actually use NFTs as a hedge against inflation and to just take their money off of exchanges and put them in a less liquid asset. And you can see that right here. In the last 24 hours, we had some massive sales. We had a $3 million CryptoPunk sale, a $500,000 Doodle sale, another $500,000 Doodle sale, a couple $300,000 CyberKongs, Doodles, and Bored Ape Yacht Club sales. So in my opinion, the NFT market is still alive and well. We're seeing less volume because we're seeing less volume everywhere. There's a lot of sell-offs, and so it makes sense that people aren't buying as many NFTs, but we are seeing the strong NFT collections holding their values, which is what we want to see going into the 2020 year long term with NFTs. We want to see these things holding their values and not just fluctuating a ton. So in my opinion, we could definitely continue to see a sell-off for the next couple of weeks, maybe even the next couple of months, until we get to the end of this tapering by the Fed in March-ish timeframe. But regardless of that, I'm still extremely bullish on NFTs for 2022. And in fact, regardless of this volume drop that we've seen, I believe that we're going to see an incredible bull run in 2022 for the total NFT market. And if you want to learn more about that and you want to see where I'm going to be investing in 2022 with NFTs, make sure to check out this video right here.